Hey everybody, what's up? This is Tim Reset from eminimind.com. Thanks for joining me today for this quick video. I wanted to show you how I use Heikin Ashi charts in my trading. Now, in front of you, you have a Euro chart, the 6E. This is a 233 tick chart. And I only use Heikin Ashi on the tick chart, and I find it very helpful for quickly being able to identify the trend. So if I go ahead and flip back to a regular candlestick chart here, you'll notice, the trend is visible in most cases, but what the Heikin Ashi chart does, as opposed to taking the open, high, low, and close, is incorporate the average open, high, low, and close of the prior candle. So if I flip back to a Heikin Ashi chart here, it becomes very clear when the trend changes, when we go from red bars to green bars, and then green bars back to red bars. So when you're drawing, in this case, 50% retracements or halfway backs, or looking for a trend break, or looking for a higher low, lower high, the Heikin Ashi candlestick chart makes it very easy to identify the trend. Now, one of the other things that I like to look for, in addition to breaking or changing colors, is a break of the prior swing, high or low. So if I zoom back here to all the way to the left, we're in a downtrend. Clearly we're in a downtrend. We're making lower highs and lower lows. Again, over here we have a high, a low, a lower high, a lower low, lower high, lower low. The definition of a downtrend. Now, we have red bars, and now we have some green bars. Okay, we make a lower high, and then we come down here and we make a higher low. Not only do we make a higher low, we have the Heikin Ashi candlestick changing to green. And then we have a higher high. So now, not only we're in a downtrend, not only do we have our first higher low, then we have our first higher high. And this, in conjunction with a halfway back, makes for a great entry. So if we pull over to the right here, we can draw, in this case, from lows to highs. Once we break that, once we pierce the prior swing high, we make a higher low and then a higher high. We can draw up the 50% retracement, and in this case was a 44.10 on the euro, and this one was dirty, meaning we did come down and pierce the 61.8, but nonetheless the trade worked out. With a 8-pip stop, you would have had plenty of room below this trade. Getting in at 10s, looks like the low here was only 0.5s, so you went in 5 pips, and then we continued to rally. And all of that stems from identifying the trend and then looking for that trend reversal with the higher low and the higher high before drawing your next setup. If you guys do have questions, go ahead and hit me up on Facebook, facebook.com/eminimind. I'm also on Twitter at eminimind, and don't forget to check out the blog, eminimind.com. Thanks guys, have a great day.